This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. We have a big surge in oil this morning. You can see up over 5% for West Texas Intermediary crude. We've got basically this perfect reflexive bounce from the pre-Iran war gap fill back in February 2028 before bombs went off indiscriminately. And then we've got a memorandum of understanding, which caused oil to deflate along with a futures market that's very manipulated. Anyway, the point is it stabilized here. Mike went long futures and I said, I can see a definite bounce move into 85 with an overshoot to 91, and we are there. So does this get and stay above 91? That would be very problematic to bulls because we are now in the grips of obviously higher oil, but also higher dollar and higher yields. And as I mentioned, this is the headwind to equities. Qs are also back below 701. And I said first time it bounces, second time it breaks. These are the levels that I've given repeatedly for weeks. Here's QQQ. We get back inside 701. We head down to the 683, 677 area. The combination of this regime that I've warned about of higher dollar, look at this puppy, exactly what I expected, boom. And then, of course, higher oil, exactly, but dangerous. This is still very, very problematic of higher oil, crude above 91. And then, of course, yields. I gave a 4.8 level, which is critical. Look at this puppy. It just gapped above 4.7. So obviously, we have a headwind, and I think this is a little bit of just a reminder, high risk, high price, which was the post that I had written, and specifically last week. So you've got high price, high risk. Just a reminder that risk happens fast. The market has been warning since the end of June. I've been warning since June 1st. And then again, AI memory super cycle hits a pause. And then, of course, we've got mania over macro is as the reason for the run up and macro over mania for the reason for the run down. So long story short, rising yields are still a key consideration as kryptonite to bulls and all that jazz. Look at gold even rejected perfectly on 41.60. I mean, just exactly textbook technical analysis. This is why I do technical analysis with a live trading room and then weave in macro and intermarket and fundamental and sentiment and option flow. We're going to probably have a little bit of this put monetization because the market still is heavily hedged. But my point is rising dollar, check, rising oil. Look at that perfect 91 WTIC tag and rising yields, kryptonite to AI bulls. Even though we've got gold moving lower, of course, Qs moving lower, and SPY, look at the put monetization that is underway. And the dollar higher with yields and oil is the reason for the season. And here we're going to have a big old test as it relates to maybe we pull back to this 85 and that launches higher. But this is definitely exactly where I gave as a price target. And we are here. If this gets and stays above 91, I don't think it'll be right away. I think we can chop a little bit in this kind of 85 to 95 handle. But you know what happens if we get above? Yep, it is very, very risk off. And that's really all I wanted to say about that. So the 10 interior yield curve, a little bit of a flattening today. Why? Because bonds are tanking and yields are spiking. That's going to interrupt a whole bunch of also confidence in credit markets. So let's just kind of pace ourselves right now. Translation, you're protected, hopefully, on those lower Q prints and the Google disappointment that I was expecting and the higher oil and yields and dollar thesis, which are macro trends I can introduce. Like I said, the high price, high risk, we're there. Now let's see how we do in monetizing that for those who are protected. And you've got the Qs sitting on this kind of 695, 6 area, but it's a gap below the 701. The Qs already came inside. There's your 10-week flattening the 10-week, flattening the 10-week, pathetic excuse for a bounce, break below the 10-week, and now we're firmly below the 10-week, and look at the high. The high is 709. As long as we stay below 709 for QQQ, I said, you have more benefit to press short. So the August put spread, for example, you're fine, that kind of thing. NASDAQ composite, you know I'm waiting for 75,223. How long have I been on this? A really, really, really long time. All of May, all of June, all of July. We are now July 23rd, and here we are again. Have not broken with a close below that level for COMPQX composite NASDAQ. We have not closed below. We have not closed below. We have not closed below, but we have tested it 3 weeks. And the more times you test it, the more likely it breaks. So that's why I say equity bulls need to defend here. Otherwise, this is going to come right back down, and it could be very quick. So 25,223 on NASDAQ Composite Index. It's sitting there again for the 4th week. This is really what has to give sway for the market to roll over and volatility to strongly enter. And you've already got my line in the sand. We need a weekly close above 1950. We need a daily close above 19. We need an intraday push above 1929. So VIX is here. NASDAQ Composite is threatening a breakdown. Qs have already broken the 10-week. SPY has not, but it's really close. And all of this is really looking a little bit more like a two-way market should. That dollar yen to me is very, very important. I've written about this. I feel very strongly about this. This is a wrecking ball for higher dollar. We have higher yield. We have higher oil. It's not a fait accompli that we can't roll over into some protective plays. Yeah, no, dollar's so strong. So strong. Market's so weak. This, you're going to have to just take it with a grain of salt from me. When I start to get that feeling in the hair, the back of my neck starts to stand up, it is one of those total trader instinct calls. Everything leading up to this wasn't. None of this leading up to this point right this minute is trader's instinct. It is just solid analysis of dollar, yields, and oil, and gap fill risk on the downside, and Google disappointment expected for market reaction, but beating on earnings because everything is as good as it gets type of pattern, not rocket science. Sector rotation right now into energy, into the XAR holdouts, healthcare kind of holding up, et cetera, but not enough to really get me excited. But it is what is right now holding the market from having a VIX event. I mean it. If we lose that little bit of sector rotation that we have right now in the XLIs of the world, the XLVs of the world, the XLFs of the world, which by the way is a little bit weak. None of this has crashed. None of those have crashed. I'm just not trusting it. In lieu of sector rotation, there will be volatility, and volatility has a look.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.